Is your approach discretionary, or do you utilise mechanical trading systems?
Like most people out there, I've tried to create algorithms, black boxes, this kind of stuff, don't work. While human beings are still knocking around, they're still the best trading instrument there is, and it's as simple as that. It's not, what you can't program, well, maybe you can, maybe there's cleverer people than me, but it's all about the psychology of trading. It's understanding people's pressure points, pain, and that kind of stuff. That's the real art of trading. Anybody can scan a chart for a specific setup. There's things like auto chartists out there, and there's a load of clever guys that I used to manage in the city making black boxes, grey boxes, but the amount of money you need, human hours, phenomenal. You know, my dad is involved in big data and that kind of stuff. You know, he has these huge databases that, you know, that can read 1 billion terabytes in a second. If he was that smart, he'd just plug it into the market and make money, right? At the end of the day, people like me exist, people like, you know, in the city exist because they make money with their brains. The human brain is still an amazing thing, and there will be people out there that make money from algorithms, from trading, but for me, they're actually quite a small, in my experience, you know, my personal experience, quite a small part of the markets.
You have an 80-20 rule of trading. Tell us about that.
Well, I mean, it's basically that the markets will move 80% of the time due to technical analysis because there's more of it. You know, people will look at charts, make a decision. The 20% is down to fundamental stuff, news. There's just less news. You know, you only get one Brexit, hopefully. You only get one Donald Trump, hopefully. So, you know, big things only happen occasionally. The majority of people will always look at charts because it's a constant. So the technical data, the technical movements will help speed up, you know, the technical side. But they are what they are. You know, it's non-farm payrolls, it's interest rate decisions. They don't come around all that often. So the majority of people will just look at charts because, again, like I said, they're a constant. You can always go back to a chart.
With regard to technical trading, which takes up 80%, are there specific indicators or chart patterns that you look at?
Again, I'm a big fan of Fibonacci because it's almost, if you get it right, it's set in stone. You know, a lot of these things like Elliott wave can be, you know, down to interpretation. Bollinger Bands, again, so obvious because the, you know, deviations around a moving average, they're there to be attacked. Whereas Fibonacci, it is what it is. You know, if you've based, you know, previous movement and then you can understand where it's going to go in the future, then to me that kind of flows and it works. I mean, I don't really kind of try and be too overly complicated with technicals. Like most people, I searched for the Holy Grail for a number of years, and I thought that I could use Ichimoku clouds and this indicator, that indicator, and I've hired teams of people in California. It does cost a lot of money, and it doesn't really do anything. As I say, the human brain is much more powerful. What I try and do is put a framework on the market so I understand what the average guy's doing. Then I try and understand what the big boys are doing, and I just look for the crumbs in between. That's literally it. 15, 20, 25 ticks. I'm a happy man. That's it.